Good morning. It is July 12th, 2019, and the global economy has got a problem. So let's talk about that. This morning, we got numbers from Singapore. In fact, they were probably out last night, that their economy actually contracted 3.4% last year. This is reminiscent of the fact that global trade is suffering, not just between the United States and China, but China and other countries, Japan and South Korea, Europe and the United States, Europe and China. Germany is having problems, and there's very little being done on the fiscal side to create any type of rebuild of the global economy, which I have suggested starts with infrastructure any number of times. The pace at which we are addressing the realities of the slow growth forever economy is so glacially slow that one can only conclude that the vast majority of politicians are stupid and don't understand that demographics is not a monetary problem, that massive global debt is going to continue to be an overhang, and that technology is, by its nature, not necessarily deflationary, but disinflationary, an offset to inflation, because in theory, although we haven't seen it lately, in theory, technology should improve productivity. With productivity increases typically in the last 100 years and longer, that has led to economic growth and higher standards of living. And while we are probably seeing higher standards of living for those who are employed, and employment is at higher levels, that higher standard of living, I think, having spent a lot of time driving around again and about to do more, is possibly transitory, possibly temporary. We have got a major problem when it comes to reinvesting into the parts of the economy that support the rest of the economy. We are having a problem with education. We are having a problem with infrastructure. We cannot handle the problems that are being imposed by climate change, wherever that's coming from. And soon, we are going to have a financial downturn that hopefully jumpstarts the system to doing things the right way. Again, with all the preoccupation on nationalism and false pretense populism, I have my doubts. I believe that next year will be a very rough year and filled with uncertainty, and that we as investors had better be very, very careful. I have started selling holdings in the last several weeks to bring my asset allocation even more in line and with the asset allocation recommendations I made back in April. The new market highs do not deter me from being a seller. I am just being more of a seller, and I am taking profits where I can take profits. Hopefully, people followed me into Newmont Mining. That position is up with the dividend and the covered call that we wrote, well over 30% in just a few months. SunPower, I hope you followed me into. That has roughly been a doubler, and I would be selling half of that position if I were you. The Newmont Mining, I'd be writing another covered call. Or trimming the position by about 20 to 30%. Google, we're up maybe 10% on in the last year. But we have some things to talk about with Google coming soon. I'll just briefly get to that later in the webinar. So let's go back to the economy. We have seen global trade slow down dramatically. China's exports have declined 1.3%. and they are the flip side of the American economy, which is 70% consumer driven. They are right around 70% export driven. Now, that's better than it used to be as their consumers start to filter into their economic picture, but they are still hugely dependent on exports. What that means is that it's quite possible that on Monday, China dramatically misses their economic GDP numbers. Now, there's every reason to believe that they'll lie if those numbers are bad. But I think that most people will be able to see through that. So if their imports have dropped 7.3%, largely because of our technology positions with them, what does that mean for their overall economy? And what is the knock-on effect? Well, Singapore's economy experienced the slowest growth in a decade. Does that mean we're on the verge of a financial crisis? Does any of this mean we're on the verge of a financial crisis? No, not necessarily, but I think that a lot of people are going to learn what a recession is in the next year or two. And the fact that a 10% or 20% correction in the stock market is no big deal. Why do I say that? Because they're going to get to experience a 30% correction, maybe 40 or 50, but more likely 20 to 30. So let's be careful with our positions and consider what a slowing economy can mean to us. Mind your asset allocation. Ask yourself the question, if I go into a stock market that is falling because of a contracting economy, what does it mean to me if I lose 30% of my portfolio or 40% of my portfolio or 50% of my portfolio? Take a look at it in the context of oil. Many of our oil investments are down that much, and that's a quarter of a lot of people's portfolio. So a lot of people lost 10 to 15% in the past year off the top and have been trying to make it back in other places. What if the other places lose that much as well? You need to ask yourself those questions because it will lead you to a place where you make much more careful decisions. Again, back to the economics. There's a whole series in the Financial Times about their economic slowdown in China. It doesn't get read by many people. It should. China's economy is slowing, and I think that there's a good possibility that they don't care too much in the short term. I believe that China is playing the long game with regard to trade and President Trump. And if they have a cleansing period or a small downturn, they will simply print money. And they will make some deals, potentially, with Iran that makes life a lot more complicated for everybody else on the planet. Should we be worried about the German economic slowdown? Yes. We've gotten to the point where India needs rain to improve their economy. That's how serious the climate change is in India. If you talk to anybody there, and I'll be spending a weekend in the woods with somebody who does import-export and technology with India, and he goes back for a few months every year. He's a pretty connected guy. What you'll find is that you hear stories of the economy in India struggling to get out of its own way. And then, by the way, they're having horrible results driven by weather. Nearly half of U.S. financial chiefs see a recession within a year. That's what I've been telling you, is that sometime next year, maybe the first half, maybe the second half, we do see recessionary symptoms. I have coined the phrase a skip straight recession, where maybe it's not back-to-back quarters that are negative, but it's just 2 quarters in a year that are negative. I still think that's probably the most likely scenario, a first and third or a second and fourth or a first and fourth quarter downturn next year. Another study, same thing. So as the recession risks rise, we have seen Fed Chief Powell do just an amazing about-face since last December's autopilot comments. And I have to give him credit for that. I saw Powell coming in as somebody who probably didn't know what was going on, and I think that was true. I think he has undergone a massive learning curve, and I will give credit where credit's due. I think the guy has figured a lot of things out. And the fact that he's lowering interest rates as an appeasement to the market, that's nice. But as I've said before, the end of quantitative tightening in September is a bigger deal. That's $50 billion that will no longer be getting sucked out of the economy and markets. And we will see an impact from that, at least in the short term. Ultimately, though, Mohamed El-Erian was talking about this the other day, and I've said it as well. The Congress and the president at some point have to get on the same page and pass a massive infrastructure modernization and rebuild bill, something that drives a sustainable economy for the next several decades. And that sort of a bill would take 10 to 20 years to put in place. We've talked about the new transmission lines and the smart grid going in, and I have advised my children not to move to the desert Southwest because I think that cities like Phoenix in particular, but Albuquerque as well, and other cities in the desert Southwest have massive problems coming with regard to water. Already they have problems, but those problems are going to get worse. At some point, we're going to have to turn to recharging the aquifers by desalinating the oceans, and that is many years away. The need is right upon us, but the ability to do those things are quite a ways away because we haven't even started yet. And the conversation is focused on things that matter very little. When I was in college, we used to hang out with a friend's grandfather in Muskegon, Michigan, right? We fished, is it called the Little Muskegon River? We would do some fishing in there. And he had a friend who was British military intelligence with him during World War II. And he would talk about how people got fat, dumb, and happy when the economy was good. Take a look at the topics that are being covered by the presidential candidates. Take a look at what's in the news today with equal pay and everything else. And not that these aren't real issues, but they're not top-line issues. They're not what's going to drive standard of living and economic wealth in the United States or anywhere else. So, I don't want to get into any particular topic, but when you take a look at what's going on, I would suggest that you ask the underlying question: how did we get there? And why does this rise to a level of importance where it dominates a news cycle? And I think you will see over the next year that we talk about a lot of things that are not baseline super important issues. They're important, but they are not the things that drive the economy. Ultimately, a few of the candidates who talk about climate change, they're pandering a bit, but they do have a step closer to the reality, even if it's by accident, that we need to rebuild the economic infrastructure from bridges to transmission lines to water, or we're going to have massive, massive problems in the not too distant future, because those are what support the economy in the first place. And by the way, we have all of these other problems emerging to the point where the Pentagon and most global institutions and most governments are saying that we really better figure out this climate change thing. If we can slow it down, we should. And if we can't, then we need to adapt quickly, because having seen what's going on in France with the temperatures and Alaska, my parents went from Las Vegas to Alaska, and it was warmer in Alaska last week than it was in Las Vegas. What sense does that make? There are a lot of things going on that we don't understand probably, but we still have to adjust to. And those will have massive impacts on the economy. And if we have shocks to the economy beyond just what we're doing with trade, then we're going to get double whammies and triple whammies and two bigger recessions, right? I have suggested that we would get a double dip recession. I still believe that. I think we'll get one next year, might be weak, but then ultimately in the not too distant future, we'll get a more severe one. And then the financial crisis comes when the baby boomers are fully pulling out of the economy due to retirement. That's the longer term picture. In the shorter term, what we need to do is, New York Times doesn't like me because I don't subscribe. All right. In the shorter term, we have to decide how we each are going to invest. Are we going to be super long term and just ride through it? You can do that because in the long run, the government generally does the right thing, or at least pours money on it, in which case assets eventually go up. Will that lead to a long-term gain for you from this point? I'm not really sure. What I think is that the market highs that we're hitting now and that we might hit at some point in the next several years will probably be the highs that we have for the better part of a decade. Most of the projections out there for economic growth, for earnings growth, suggest that 4 to 6% return is what you should expect over the next 10 or so years. And that would be, I think, generous for most people, given that they sell when they should be buying and they buy when they should be selling because of emotional reasons. Right now, the market is high and everybody's like, well, look, it's high. It's great. It's going up. We just went through what some of the smartest people in the world are thinking with the executives, even if they're greedy, on a lot of levels, and inside their own little worlds. But inside their own little worlds, they generally have an idea. And we have the economies of Singapore, China, Germany, and the United States all slowing down, in Europe and Japan. So what does that mean for you as an investor? It means, like I said in April, you need to be pulling back on your equity asset allocations. You need to be holding cash. Bonds, could interest rates go even lower? Absolutely. We could get zero interest rates again in the next year or two. But is that where the biggest gains are? I don't know. Somebody doesn't like treasuries right now, and that could be part of the conflict with China. There was a couple of very bad bond auctions lately. So the typical safe haven of U.S. treasuries might not be the place. I do think that the dollar is going to get very strong, and that UUP, or just holding cash, might be the way to go. Is there a silver bullet coming? What did we talk about back in February and again in April and May? That the China trade negotiations might just be getting strung out. That China will get what they need to get when they need to get it, call it an olive branch, and then not cut a deal. Now, I will say, the deal that they had in place in May that President Trump said the Chinese backed off on, I don't know if I believe that the Chinese backed off or if we backed off or if it was a little bit of both. But for whatever reason, that deal didn't get done. And I don't think we are likely to get a deal with China before the election. I don't think that President Trump is able to cut that deal before the election. If there is a deal, it'll be what I have called a fake deal. And maybe it sugar highs the economy a little bit. But ultimately, China is willing to wait us out. Because if there's an economic slowdown, the power structure in America will change. But in China, it won't. And they know that. So we are at a distinct disadvantage with China, and we might have to accept that our economies are long-term less intertwined. And if that's the case, that means that this conflict, and several very astute analysts and academics have talked about this, if that's the case, then we have to consider, do we have a sort of Cold War with China that's going to go on for decades? I hope that's not the case. I hope that there's a way to work with them, but there's certainly not a way for us to force changes to how they govern their country, which is what President Trump has tried to do through economic pressure. They've accepted the economic pressure with the idea that, hey, we'll just wait you out. So if President Trump wins next year, then I think you probably get a deal. If he loses next year, I think you probably get a deal. But I don't think it's the big comprehensive deal that everybody originally thought might happen because, oh, we're the big, strong United States guys. It's not going to be anything more than papering over the main trade issues and getting them to buy more things from us. And that might be enough. Ultimately, people decide who the rulers are one way or another, and we're not going to be able to force that, particularly in a country like China that, you know, we can't put all that much pressure on. Stocks that you should sell. One of the things I would tell you is that REITs are going to get their asses kicked. I don't know when that it happens, but it'll be soon. And I have been looking at real estate all over the country and talking to real estate investors. Just talked to a guy, University of Chicago educated guy who owns properties in Chicago and Milwaukee. Very interesting conversation. It was short, but you know, he was basically thinking the same thing I am: accumulate cash, and then wait for people to get over their skis during the next economic slowdown, because real estate prices right now are obnoxious. Back in 2007, and even in 2006, but more in 2007, I told people to sell all their second properties, and if they were looking to downsize at some point, to do it sooner than later. I will tell you that now too. Real estate is overpriced. The city centers have been overbuilt. You can take a look at New York. You can take a look at Milwaukee. You can take a look at Las Vegas. Almost all of the big 50 markets have overbuilt. And that means that you are going to see a softness in real estate prices at a minimum. But ultimately, if that leads to tightening finance conditions from banks, then you will actually see real estate prices drop. So there is a knock-on effect as the banks become impacted. Stocks that you can sell, I mean, if anything is on your list from here, these guys actually did a good article here. They threw it out on Yahoo. I don't like AMD. You know, I'd rather have NVIDIA, but I don't want NVIDIA right now. Exact Sciences, something that I made 1,000% on. I thought we should be selling it in the 70s, and it's 112 right now, but it's valued at 30 times revenue. That just doesn't make sense. It's not growing that fast. I like Roku. I just bought a Roku TV, but they're overvalued. So you go right down the list. It is very easy to find overvalued stocks in the stock market right now. It is very difficult to find undervalued stocks. Some of the things that we want to talk about and think about are the mid-year risks and opportunities. I don't see a lot of opportunities. In fact, the biggest opportunity, which I will be trading later this afternoon, I'll talk to you about in a minute, is going to be buying some puts on the stock market. Let's do a quick talk about oil, since people are asking. Will oil suffer if there's an economic slowdown? Probably. But actually, rising oil prices would mean that that would put pressure on the economy. So we have seen several periods in the last 40 years where oil prices rose, and that ultimately led or contributed to, and in fact, every recession has had this circumstance. Oil prices go up and a recession occurs. Why has that happened? Because there's always been price pressure from demand exceeding supply of oil. Now, that's not true right now. Right now, we have more oil than there is demand for. The IEA, International Energy Agency, just put out a report that the expected 500,000 barrel a day shortfall in the second quarter actually was a 500,000 barrel per day surplus. Why is that? There is still a lot of knock-on production coming from the Permian and U.S. shale, as well as everybody out there trying to maximize their production. Why is everybody trying to maximize their production? Because it's what they do. It's what oil companies do. They produce oil. And in their heads, more oil means more profits. And a lot of them are too stupid to realize that that is not the case right now. So if we go all the way back, well, let's talk about Iran in a second. There we go. The oil supply exceeded demand in the first half of the year. So the question becomes, will financial stress in the shale sector slow production growth? And the answer is probably, but not necessarily. With the new pipes coming out in the Permian, you are going to see some of the mid-sized producers produce a little bit more, although financially, as we discussed a few webinars ago, they are having a very hard time doing any type of production unless it's out of free cash flow. So the banks have tightened up, private equity has tightened up. Really, there's not a lot of money awash, which is why I've said the small wildcatters, the companies that have lived on cheap debt, they're going to have a problem. So we have used a chart before, a screening chart that showed there's only about a dozen companies that are either free cash flow positive or at least break even. There's another dozen companies that are close. The other 30 or 40 companies of consequence are losing money, and the wildcatters are pretty much all losing money as well. So at the margin, remember, we're only talking about 1 million barrels per day in either direction for surplus or deficit. At the margin, that 1 million barrels a day is 500,000 actually right now above. It's more supply than demand. What would it take to go 500,000 barrels in deficit? Not much. So what are the things that could drive us to 500,000 barrels of deficit or 1 million barrels of deficit? Well, we can start in the Middle East. What's going on between the U.S. and Iran that I said 2 years ago was coming is finally coming to a head. Why is it coming to a head now? Everybody has their reasons. I just think that it has a lot to do with the political cycle. And for whatever reason, President Trump decided that waiting out the Ayatollah, waiting for him to die, which is what everybody else was doing, wasn't going to be his strategy. So now we're at a point where he wants cheap oil, but he wants to confront Iran. The Ayatollah is like 80 something years old. The plan was to wait him out, was to let him die, and then intervene or influence the new leadership. So we'll see what this strategy leads to. But it's clear to me with people like Bolton and Pompeo running around that at some point we are going to launch a missile strike. I have no doubt in my mind that's what's coming. Now, I don't see boots on the ground. Maybe some special forces, I guess. If there's an uprising in Iran. But I think the most likely thing that we're going to see is that the Iranian Navy gets targeted and mostly destroyed in an afternoon or a day or two. That's how long it'll take. And that some nuclear facilities are destroyed and accidentally a pipeline or some sort of oil facility is destroyed, or 2 or 3. That'd be my guess. And from that point, there'll be a lot of outrage, a lot of death to America. But if we're not bombing their cities, if we're not causing major damage to the population centers, then probably it doesn't matter that much from the standpoint of terrorism. Now, I'm not advocating for this. I would have been happy letting the Ayatollah die and then worrying about it then. This is the path that we're on. Again, I don't root for it. It's just that I've seen it coming for 2 years, and in the next year it's going to happen. And in fact, if I had to guess, I would say right after summer, we probably see those missile strikes. And it'll be September, October, November is what I would anticipate. And that will drive the price of oil up enough and for us to hopefully escape from our oil equities before we actually get a recession. So if you go through these articles or scholarly pieces like I have, you come up with the short story that I just gave you in 4 minutes. Rather than waiting out the Ayatollah's death, we decided to go in there and stir up the hive. At the same time, there is internal pressure pushing the other way, but it doesn't matter because for the next year and a half, President Trump can veto anything he wants. And unless the Republicans in the Senate decide that they're going to override, and in the House, because the Democrats don't have that big of a majority, every veto is going to be upheld. So, there's not a chance really for any overrides. So while the House can say get out of Yemen, it's not going to happen. For whatever reason, we choose not to build a pipeline to Canada so that we can not have to deal with Saudi Arabia. Newsweek, right? Russia says a war between the U.S. and Iran is more likely. Now, granted, they have reasons to stir up the hive too, but I think they're probably right about that. Australia, okay, some of our buddies, they think that's more likely. Okay, so it's not just Russia. The Europeans, Australians, they all think the same thing. We're getting to the point now where we have to spend money on naval escorts for oil tankers. We just saw 2 incidents where a U.S., I don't know what kind of ship it was, but then also a UK ship had to intervene in some things that happened. One in the Straits of Hormuz, I believe. The tanker that the Iranians approached, and then they were chased off. So, how much more of that is going to happen, I don't know. But the fact is that we're spending a ton of money on this. Why? Because we don't want to build one last pipeline to Canada. This general says, if we confront Iran, that's going to mess up things with China and Russia. Well, think about it. China gets a lot of energy from Iran. Russia has always tried to play an influential role with Iran. The Iranian people don't really like Russia, but the Ayatollah, he gets support from Russia. So while Russia supports the Ayatollah and people like Assad, they have influence. We are trying to end that influence in the Middle East and doing a really bad job at it. Why did Trump decide not to attack Iran? Frankly, I just think it wasn't the right time. He's going to wait until after the summer driving season. It's that simple. He doesn't want an oil price spike, a gasoline price spike during the summer when people are driving around. And then we have something like a hurricane thrown in. Probably going to mess up production. I think it's like 65% of the rigs in the Gulf of Mexico are shuttered right now. And we'll see what happens with refining. So nobody really believed me when I said this a while back, back in February, March, April. But there is another wave of bankruptcies coming, and it's going to be the smallest producers. They're not going to get financing. So they'll get absorbed. It won't matter to us. You're going to see companies like Devon and Concho and Pioneer and Exxon and Chevron buy these little $100 million companies, right? That's what it's going to be. And they're going to buy a lot of them. And then they're not going to produce. They're not going to go out there and drill those wells. So as consolidation occurs, I know somebody asked a question basically saying, hey, if there's bankruptcies, won't it be just like the last time where the drilling went up? And I think the answer is no. As the consolidations occur, and these consolidations will be different because the last time the banks bailed a lot of companies out. The banks aren't doing it anymore. So with mergers and acquisitions, fewer hands controlling production mean tighter production. And there have been suggestions that we would go back and see different types of allowances for production. In the past, there were allowances and you couldn't go over your allowance for production. And I think that is possible, but we'll see. How serious is what's going on for drillers? Weatherford went bankrupt last week. They're huge. They were huge. So they're going to get rid of 70% of their debt in the bankruptcy. The shareholders are getting wiped out. And, people have asked me, what about, in the past, the service companies were the ones leveraged to bull markets in oil. I don't think that's going to be the case because as we see with companies like Concho and Pioneer, these shale companies, and we watched a video this week, these shale companies are getting so technologically advanced that they can increase production or at least maintain production with fewer and fewer people. Pioneer is getting rid of 25% of their labor, from management down to labor. And their production is probably still going to drift upwards. There's also the issue of DUC wells. So there are still a lot of drilled but uncompleted wells out there. And that means that they can basically do half a job and start production going. So you're going to see a fairly steady supply picture throughout the system, except at the margins where the little guys go bankrupt. So can we see 1 million barrels a day come off in the United States and then probably get replaced again. Yeah, but that would mean that we have a flat period in production growth. And that would probably be enough because demand continues to go up, even if we get a flat year because of a small recession. Now, just to jump way into the future, solid state batteries are coming to electric cars. I told you, Toyota and Tesla, right here, first paragraph, are the companies that are going to do this. And I don't know exactly how this technology works, how they're going to make it happen. It has something to do with zinc and using less lithium and something to do with oxygen. Ask an engineer. But at some point, these batteries are going to be so good, 5, 6, 7 years out maybe, that sales of EVs will exceed sales of gasoline-powered cars probably by the end of the next decade. Almost certainly, I actually think. So once that happens, then you get the slow retirement of the gasoline fleet, which is why oil investing is not the greatest thing to do anymore, although we can trade it. So how do I expect to trade here going forward? Let's knock that out. First thing, first things first. Because we have an oil position, let's take a look at oil. It is literally, let's look at the weekly chart. Beat to hell. I mean, look at where the RSI has been. Money flow finally stabilized here in the last couple months. But MACD is not sexy at all yet. Take a look at a 5-year chart. Take a look at a 10-year chart. Right? Just gross. But this is really indicative of basing. And we take a look at the 24 or so companies that will come out of this pretty well. You see that the value there is enormous. Not slight value, but these companies, relative to where they'll be on a profit scale in 2 or 4 years, I mean, they're half price or less. They might be, a lot of these are set up to triple. Some of them are set up to quadruple. So how do you play that? I think probably I'm going to get rid of XOP on any rally just because I'd rather focus on individual companies. I really like the companies that I put in my Dirty Dozen oil stocks and then a handful more. So I would take a look at the Dirty Dozen oil stocks article over there on Seeking Alpha. Just if you haven't read it or you haven't heard of it, you're new to listening, type in Dirty Dozen oil stocks for 2019. Maybe put my last name after it, Spano, S-P-A-N-O, but it'll pop up in Google pretty easy. But this, this is telling us that we should be getting into these positions. Now, I thought that in a lot of these places, and December just was brutal, right? Fourth quarter last year was brutal. But there hasn't been really any pain this year. Now, there is the psychological damage from last year, but really there's not really any pain this year. And we have to get over that hurt, so I'm not going to do it again, right? The survivors here are going to do what the survivors in solar did in 2012. Right? In 2012, solar got crushed. It was like a 75% sell-off, 80% sell-off. But if you bought in here, you got this huge rally. And it more than doubled. Now, since then, solar's been on malaise and built this huge base. But it's been drifting upwards lately. Now, could this pull back in a slowdown? Absolutely. I think we will get another chance to buy these companies in the future around here. So while we've done really well in SunPower, right? Buying in the 6s and 7s. And I think it sniffed 12 the other day. Maybe not. And 11s for sure. And then First Solar, we bought on that pullback about a year ago. I think done it twice. You know, we're in good shape. Now, how far back can First Solar come? I keep saying right around 50. That still makes a lot of sense in my head. Could it go lower? Absolutely. If next year, the end of 2020, it looks like the end of 2018, we won't be trying to hedge. We'll just be out of everything. And maybe we'll actually speculate to the short side. So if I had to guess, I would say that the fourth quarter of next year could look a lot like the fourth quarter of last year. And that's what I'm keeping an eye on. The end of quantitative tightening in the shorter term is going to be pretty good for markets because the slowdown won't be, everybody's just going to believe the Fed's going to fix it. Monetary policy is going to lose effectiveness. It already is. But in the short term, people won't believe it till they feel it. So QQQ has rallied off the bottom. I've been selling QQQ. SPY, which I never own because I own QQQ instead, set a new high. I'm a seller of that. And in fact, this afternoon, I'm going to buy some puts. I bought just a couple yesterday. I'm going to buy some puts. I'm going to buy the 295s down to the 288s over August, September, October, right? So the higher priced ones, shorter duration, longer priced ones, lower priced ones, longer duration. And just a couple, so maybe 1% in each one. Because I think Monday we might see some real bad news out of China. We could get quite the economic shock on Monday. If you aren't inclined to buy puts on the S&P 500, at least trim your positions proportionately. I would not be dumping any of your options on energy because they're down 90%. So you have nowhere to go but up on those. You know, why take 20 cents back? But I wouldn't be buying energy stocks either. I really just think you need to accumulate cash. If you are a retiree and you're not at least half cash right now, you need to slap yourself in the head. Because what's going on in the economy now is a mini version of what went on in 2006 and 7. It's not nearly as bad. But a recession is a recession. And in a thinly traded market, which is what we have now, because the boomers are in net withdrawal and pensions are perpetual sellers now, right? Just to make this point clear again, pensions are perpetual sellers now because they have to provide the paychecks to the boomers who are retiring. And there really isn't much new money coming in from Xers and millennials because most Xers don't have a pension. They've been phased out and pushed into 401ks instead. And millennials, no millennials have a pension. So these pensions are in what's called long-term runoff. And they are perpetual sellers of the equities and other securities that they own. And they have to do it because they are obligated to pay for benefits. And interestingly, about half of the public pensions in America are underfunded by 30 to 50%. So we have a crisis coming there. And the only way to fix that is the government's just going to have to pay out the money. So it's either higher taxation or print money. And if you've been listening to President Trump, you know that he thinks the dollar should be lower. I disagree with that. I think there's a better way to do things. But the strength of the dollar will allow us to print money at some point. So one of the articles I will write is that helicopter money is inevitable. I've been saying this for several years. When is inevitable? I've always thought it'd be right around 2030 that we print money, lots of it, because that's when the boomer bust will be most pronounced. However, the ending of QT is a step in that direction. And given the politics involved, I think it would actually be a pretty smooth move on President Trump's part if he suddenly agreed with some of the far left people who said, look, we should just print money to pay for everything. It could happen. Stranger things have happened. So we'll see. I anticipate a lot of sleight of hand by the politicians, and we'll see what goes on. But helicopter money is inevitable, and it might come in 2 doses. We'll see. And that will lower the value of the dollar. But again, the dollar will always remain a preeminent currency because what are the other choices? The yuan, the yen. The yen is at the end of its rope. People are starting to realize that. And as far as the euro goes, for whatever reason, over the centuries, they haven't been able to figure out that if they acted together, they'd be the most important trade bloc and economic bloc and security bloc on the planet. But every time they get to the point where it looks like everything's going to be great, a neo-Nazi or a nationalist or a retard, and I'll use the retard in the proper sense, somebody who is slow of learning, gets in power and enamors people and gets enough votes. So, it's not going to be the euro. Ultimately, I think the dollar is the reserve currency the rest of my lifetime, and hopefully I live a long time. But it makes sense to me that there is some sort of currency block that develops in our hemisphere. Whether it's with the Canadians and Mexicans and Brazilians, I don't know. But there is some sort of trade and currency block that will develop in this hemisphere. And here I'd give you some advice for your kids and grandkids. Spanish and Portuguese are pretty good languages, so is French. Get involved with South America and Central America because they're going to become more and more important. And Mexico too. Mexico is on our border, and they're an important country. And Canada as well. In fact, one of the other pieces of advice I gave is that buying real estate in the Great Lakes region is probably the best bargain for real estate in America right now. We have water. Enough said. All right, let me take a quick look at the questions, and we will get done in an hour this week. Yeah, somebody pointed out the shale boom is slowing down. It is slowing down. And I talked about this with Eric, how do you say his last name? Bosmarian? I was on the phone with him yesterday. Eric. He's the analyst over at FA Trade. Eric Bosmanian. Bosmanian. I have to ask him how he says his name. But rates of change. Consider a curve that's going upward and bending upwards versus a curve that's going upwards but starting to bend downward. Rates of change are very, very important when investing and when considering what's going on with the business. So let's see if I can find a good example. I guess I could draw it for you. Should we go to art class? Let's go to art class. I don't know if I know how to use this, but I'll try. So, come on, give me a chart. All right, just give me a line. All right. That's one chart. That's another chart. This curve is a better curve than this curve. Why? Still going up, but flattening out. Going up and accelerating. So up and accelerating is better than up and decelerating, because the decelerating one eventually levels out. And eventually, shale will do this. Now, this is probably, you know, there you go. How's that for artwork? Put that one on the refrigerator. Probably not until, 2040-ish that we see shale fall off a cliff. But this peak oil period, right? And my definition of peak oil is different. I look at it as the balance of supply and demand. And maybe 105 million barrels a day to 120. Somewhere in there is peak oil. Shale is going to just kind of hold the line in the 2020s. Wow, look at that. I need to get one of those ones where I can just use my finger. Right? This is the 2020s. 2030s, 2040s. There you go. All right. How's that? I'm going to get rid of that. I'm going to save that. Yeah, let's save that. That's a cool oil chart. There you go. All right. We'll put that one into an article. Let's see. A couple more questions. Oil stock debt is considered high risk and lenders are less interested in sustained shale. Yeah, exactly. The dirty dozen stocks aren't at risk. That was the whole point of why I picked them out. Big Pharma is in trouble. I agree. So what's going on with them? Yeah. I was early on this one. I told everybody that a huge bear market in healthcare was coming. Maybe it's finally starting. If we overlay, United Healthcare, PFE. Oh, no, sorry. I meant to do that. Hospital chains are going to get hit at some point too. Yeah, leveling out, retracing. We'll see. See how bad it gets. Even without Medicare for all, there's going to be more regulation. So, okay. Great question. There you go. Here's what I think of pipelines. I'm writing this one for next week. So we're still importing about 2 million barrels a day from the Middle East per day. And we could be getting most of that from Canada instead. But we have not built Keystone XL, which would have provided basically enough capacity to get rid of Middle East oil. And then we end up going to more conflict in the Middle East, including escorting freaking tankers. I mean, think about what that says if we have to escort tankers of oil. Because we're too dumb to build a pipeline, so we don't need that oil anymore. Could just get it from Canada. Canada's our buddy. Hey, why are we not building this pipeline in Canada? Why? Because there's people who don't want to use fossil fuels at all. Well, I get that. I'm one of them. But right now we need it. And to spend money and blood in the Middle East because we need that 2 million barrels a day, I think that's building a pipeline is less damaging, right? It's a matter of degree. Is the pipeline good in general? No, probably not, because we're probably causing climate change. But isn't it better than getting oil from the Middle East that we have to guard? I don't know. It makes sense to me. So what does that mean for the existing pipelines? It means the existing pipelines become more valuable. I like Kinder Morgan because of what their assets are. Now, Enbridge, I'm familiar with as well. I'm not a big fan of Enbridge anymore because two of the pipelines they have that are big deals are getting pushed back, and they need those pipelines. So I think that Kinder Morgan, the way that they've laid things out, pretty easy to see it's going to go up to 28, 29, 30. And they're a merger candidate at some point as well. Plus, and I actually was driving around the port of Milwaukee yesterday, and I talked to a couple people. I just stopped by some folks that I knew, and I said, "Hey," because I was going over what's called the Hohen Bridge, and I saw this big tanker, a big ship, and I thought it was a company that we're invested in. I drove down there, got lost, and then drove down there. It was hard to get into the port, and it wasn't. Some other ship. I'll put it in an article. I took some pictures, and we started talking about what's coming in and out of the port of Milwaukee. A lot of salt, just piles and piles of bags of salt and mounds of salt. But we talked about the energy because there was coal. We have some oil tankers, oil tanks, not tankers, tanks. And I just talked about how it's moving around and the pipelines that come through Milwaukee. And these pipelines, they're irreplaceable. And they probably can ship water at some point. Now, maybe the pipes have to be replaced, but the right-of-way is already there. So if we get to the point where we're shipping water, either through desalination, Kinder Morgan's on the Gulf Coast, or if Canada and the United States agree to use more of the water out of the Great Lakes because the water levels have started to go up because of the Arctic is melting and that water's coming down here. Talk to people in North Dakota around Devil's Lake. That's where that water ultimately came from, the Arctic to Saskatchewan River to Devil's Lake. Maybe we'll ship water out of the Great Lakes region. We'll see. In any case, it's interesting. I think the pipelines are going to become more valuable. I like Kinder Morgan. I don't think I need to own AMLP or anything like it. Kinder Morgan is the one I like. And Williams. I think if Williams you can get cheap at some point. I haven't looked at it lately. Williams is a good one too. What decision do I think will be made on Section 232 from the Trump administration? I don't even know what that is. But in general, I don't think uranium is a big deal. If global markets moving down and Malaysia's predicted to become stronger in the next 2 years, seems there's a disconnect. Malaysia already tanked, that's why. Value stocks in general have already tanked, right? Malaysia already tanked. They're coming off of a major crisis. Now, I think you can chop along and buy the pullbacks in Malaysia. I'm not trimming. I only have a couple percent in EWM. But we can take a look here real quick. Should have left that other one open. But you take a look at EWM. Now, this reminds me of back in 2009. I was at an investment firm, and when Barack Obama became president, in January of 2009, they all told me the economy was going to get ruined. And my question was, wasn't it already ruined? Right? Sometimes the bad things have already happened. It's just chopping along now. There's no tanking left that can happen. Right? And in fact, here's something very important. Vietnam is at 100% capacity for its factory uses. Malaysia's not. And Malaysia has a lot of good natural resources. So I like Malaysia here. It's been doing the sideways choppy thing. I think you can buy the pullbacks, right? Anytime it's under 30, I think it's buy. So, like I said, there's no tanking left. The tanking already happened. It's still down over 50%. All right. Like I said earlier in the show, I have been selling QQQ, and I am tempted to sell ARKW. The reason I'm not is because they do such a good job over there. So I'm getting rid of QQQ, the index. I'm keeping ARKW, but there's a possibility I sell that too. Nutrien, potash, it's been chopping along for years, right? In this range. But the potash market is tightening up. All the fertilizer markets are tightening up. So at some point, the economy turns back up, and this should probably exceed its highs at some point. When you take a look at the financials for Nutrien, they just get better and better and better. So this is just the market. This is just people. We don't like Nutrien because we don't like Nutrien, or we just don't know what it is. And this chart actually looks a lot like this for years. But now with the merger with Agrium and Potash Corp, the chart is shorter. So if you can go and find the old charts for Agrium and Potash, and I have a site for that, I can't remember what it is, you'll see that this is a whole new company, and people just don't understand what it is. The value of what they own, again, the underlying assets, and then you take a look at the demand for fertilizer, particularly potash in the future. This is a stock that I think, take a look at the key stats. I think it can double or triple. I really think that this is going to have a huge rally at some point. And granted, it'll have something to do with market sentiment, but eventually people look at the financials, right? The millennials can't go through life thinking that Bitcoin's going to 100,000 because it's not. It's going to go under 1,000. Under 1,000, Bitcoin will get to eventually. And I actually know how that market works, and I've been learning about it. It really truly is a big scam. But with Nutrien, the assets are so valuable that right here, that's wrong. You couldn't buy Nutrien for assets for $46 billion. Couldn't. You need at least double that and maybe triple that. These are super valuable assets. So, I think Nutrien is one of the safest stocks out there. And I think it has huge upside, and it's going to pay you to wait. So if you're a dividend investor, a retiree, you don't even have to be a dividend growth investor, but this is on the retiree list too. So if it's not, I'll put it there. May have overlooked it. I don't think so. But this is a good, widows and what was it? Widows and something, whatever. A good widow stock. It's a good widow and retiree stock. Yeah. So CTL, I mentioned EPD earlier. Oh, Enterprise. Yeah, I don't really know if I call that a breakout. I mean, if you're a short-term trader, I guess. To me, a breakout is this, not this, right? This is just part of the chop. Now, if this all of a sudden gets up to 33, 34, 35, that's a breakout. This is just trading. This is just interest rate pop, right? Does that look like a smart curve? Right? I don't know. Boom. Why did that happen? Really? I don't see the breakout. It's been range bound. CenturyLink. Again, CenturyLink, and I've been researching these guys. Their assets are far more valuable than what the market gives them credit for. Everybody's basing their valuation of CenturyLink on their old business. but their fiber network and their data centers and their enterprise business are worth way more than what this stock is worth. So if they don't get acquired, I actually could see them spinning off some legacy business. And then I think the market would like them again. But is this a value stock? Yeah, this is screaming out value. They have a new source of revenue coming. They have the ability to raise prices. So we'll see. Above 30 is a breakout. Meh. Yeah, I guess if you're a short-term trader on EPD, 30 is the breakout, but show it to me when it holds over weekly charts. Sierra Wireless, I've actually been asked by Seeking Alpha to do some research on these guys. Again, another 5G company, and I think they might be running into some competition, but they do, they have a great foothold in the market. We'll see. They should be growing faster than they are. So the question that we have to ask ourselves is, why aren't they? Now, we know that they had some changeover in clients. So this number is more recent. But if you take a look at growth over time, they were starting to accelerate and then they fell off in the last year. So what is likely to happen? Well, probably in the next year or two, they rebound. So what is ultimately their lowest price? Where do we try to buy them? It's historically for us has been around $12 a share. Chopping around buying it, haven't made any money yet. We had the one little spike, but I like these guys. I think that these are the guys that every time they get to around 12, which is I think the first time we bought them way back here, you buy them. Yeah, maybe this is the spike I remember. And it drifted all the way back down. Why? Investors get fickle. Investors get poor, emotionally irritated, and then that's what happens. All right. If I don't see the base breakout, you're blind. Okay, if you say so, RJB. It's not a breakout, man, unless it holds. And weekly charts, you need to get 4 weeks of confirmation generally. If you're a turtle trader, you understand what that means. It's not really a breakout. For a day trader, a swing trader, it might be a breakout. For a position trader, it's not a breakout. We're position traders for the most part here. We're looking at 1 to 5 year time frames. A few weeks, right? If this ends up going back down to 27, then what was it? Okay. If it goes back down in here, fills that little mini gap, what was it? This is not indicative of a major rally. It's not predictive. My point, it's not predictive. All right. Well, once again, longer than an hour. All right, you guys, have a great weekend. Enjoy the weather. And I hope everybody had a happy and safe Independence Day. We'll be back next week. And I've got an awful lot of content coming out. I showed you the list. So keep an eye out and be careful out there.